Now, I've talked a couple of times about the Fed, and I had somebody come and say, hey, Scott, what's the Federal Reserve Bank and what is its purpose? So I kind of wanted to hit on that because they have such an impact on the market, what the Fed says. And so I wanted to break down what the Federal Reserve Bank's goals are, what they're trying to do, and then how that impacts the economy as well as it can impact the stock market. Well, the Federal Reserve Bank has what's called a dual mandate, meaning they have two mandates that they're held to. The Federal Reserve Bank is an independent government agency that does not fall under the legislature. It falls under themselves. That way they don't have any type of political impact one way or the other. They are meant to be a purely standalone institution that's not impacted by politics at all. And their dual mandate is two things. It's price stability, and that's core inflation, and we'll go into that a little bit, and then maximum sustainable employment. Those are the two mandates that the Fed has, and that impacts our economy as a whole. So price stability, what the Fed is looking at is they're looking at inflation. And what they use is they use an index that's monitoring the personal consumption expenditures. What did you pay for a jar of peanut butter today versus what you paid for that exact peanut butter last year? And they're monitoring the inflation of cost of goods and products, and they're trying to keep it within, and their target of inflation is about 2%, is their target rate of inflation. And their job is to make sure that we don't go into what's called hyperinflation, or we go into deflation where all of a sudden your money, you're having to spend way, way, way more to buy a loaf of bread, or now all of a sudden the money's not worth anything. So their job is to keep prices stable and keep our economy and from a price moving forward. And their core target is 2%. So, and the other aspect of that is the maximum sustainable employment. And through their monetary policy, through price stability, they're having an impact on the overall economy. The objective and the average, or their goal and objective for the sustainable employment, is right around 4.5%. Right now, we're actually running below that at about 3.6% unemployment. And again, with our inflation, we're still under that 2% target rate. So that brought some into question of why we needed to raise rates in December of last year with such a tight labor market, where we want there to still be some ability to expand, and inflation wasn't quite at that 2% target. And so what the markets look at is, what is the Fed being accommodative to the economic conditions that it's seeing around it and willing to move one way or the other in a way that is going to help continue the good economic conditions of the United States. So we see that that's the mandate. That is breaking down what the Federal Reserve does, what its mandate is, and how it works. At any time, if you have any additional questions about the Fed, about what we're seeing in the market, call us. You can reach us at 904-346-3460. And always check us out online for any more information that you'd like at www.riverplacecapital.com.